Yo, what's going on, guys? Welcome back to the channel. If this is your first time here, my name is Vince and I post on this channel every single week about stock trading, options trading, and investing for your future. So if you guys are into that kind of stuff, want to learn more about stocks and options, and want to stay tuned with some future videos, then go ahead and consider subscribing to the channel. So in today's video, we're going to go over the 4 credit spreads that I opened and profited off of this week. We'll dive into the charts. I'll show you guys where I bought them, as well as talk you through my mindset during those trades. And after that, I'll show you guys the 2 options that I'm currently holding for earnings this coming week. But before I roll the intro on this video, scroll down, smash that like button for me. It'll really help out the video as well as the channel. I've been seeing that some of you guys are finding value from these videos down in the comments below, which makes me really happy to see. And with your support on the channel, it'll help motivate me continue to make this content for you. So before we get into the trades, I quickly want to go over why I've started to trade credit spreads. So a few months ago, I was able to turn $3,000 into $30,000 trading SPY puts during the most recent market crash. If you've seen those videos, great. If not, they're on the channel for you to watch. But after making those trades and after making that lump sum of money, I didn't feel like I made any steps towards my ultimate goal of becoming a full-time trader. Now, yes, the money was great. I was able to put money into a long-term portfolio. I was able to pump up my emergency fund as well as continue to trade with the remaining balance. But I didn't gain that confidence that I could quit my job and fully support myself with my trading. Now, for me personally, my goal as a trader is to pull money out of the market week after week, month after month, consistently with high probability trades. Now, this is where credit spreads come into play. So credit spreads provide high probability trades, sometimes 80 to 90% that you'll profit off of the trade. In the beginning, those profits will be relatively small, maybe $50 to $150 in premium per week, but it's a strategy that can be scaled up over time. So instead of pulling $150 per week, maybe you're pulling $1,500 to $2,000 per week. Now, high probability trades, 80 to 90%, that you'll make $2,000 to $1,500 per week, is a strategy that you can be more comfortable with doing full time, knowing that you can support yourself. Now, obviously, getting to that point will take time, but over that time, you'll be gaining knowledge and you'll be getting more confidence that you can do this consistently. So guys, I wanted to quickly go over that, explain to you a little bit more about the strategy, why I'm doing it. But now let's go ahead and get into the trades. All right, guys, so I got the trades pulled up. Let's go ahead and dive into it. So here is the first trade. So the first one was Home Depot. So here's my orders right here. Let's go ahead and sort of walk through it. So if I bring the calculator up, the first thing that I did was I sold the 190 put on Home Depot, April 24th expiration, which was this Friday, 190 put Home Depot. So I received $1.20, which is $120 in premium for taking this trade. So if I do 120, and then, over here is because of commission. So let's just go ahead and round up to these numbers here. So I received $120 for selling that put. As protection, I went ahead and I bought the 185. So if I buy the 185, I have to pay out $78. So if I subtract $78, my net premium for that trade was $42. So I received $42 into my account. Now I bought 2 of these, so here's the second one. So $42 was the first one. The next one I received $102 and paid out $67. So you can see I sold the 190 again and bought the 185. So my net premium on this trade was $35. I added $42 for the last one. So in total, I received $77 in premium for taking this trade. So this was a credit spread. So what did I need to happen? So now if we go into the charts, what you can see here, this is the 1 hour chart. And then on the right side here is a little bit closer in, this is a 10-minute chart. So the red line here is when I took the trade. So this was on Friday of last week. And so I took the trade here and I went ahead and I sold this 190 put and I bought the 185 as protection. So what I was looking at was Home Depot's historical past. I was looking at some of this support here at 190. And I thought from this point when I opened the trade, I didn't think that Home Depot would fall, a good amount. So if I sort of plot this out, that would be a 9% fall, give or take. So Home Depot would have had to fall 9% for me not to make my max profit. So I betted that Home Depot would stay above this 190 level. Now my probability on this trade, I think when I took it, was around 85 to 90%, and that ended up working in my favor. So as you see, Home Depot did fall a little bit on Monday and Tuesday down to the 200 level, found support, and then on Friday you saw it totally ripped up here to 212. So this trade, it stayed above 190. If we look at the shorter time frame, We can see I entered it right here on last Friday. Stock sort of, spiked up on Monday, fell, but sort of stayed range bound here and ended up at 212. Meaning that the 190 put and the 185 put both expired worthless because it's out of the money, and I was able to keep that $77. So on my first trade, I made $77 on this Home Depot premium. So the next one we're going to look at, if I pull up the E-Trade again, if we go to, the second one was Snap. So here's Snapchat. For Snapchat, here are my orders. So I went ahead and I sold the 16 call and I bought the 17 call. So if I pull up Snap on the chart on both sides. So as you guys probably saw, Snap had a really big run up after earnings, and my trade was that it would fall. So it wouldn't stay above the 17 level. So as you can see, I entered the trade right here on Wednesday afternoon after earnings. So if I pull up how much I received for that trade, so what you guys can see, if I pull up the calculator, I sold the 16 call and I bought the 17 call. So basically I sold this 16 and bought a 17 as protection. So in this case, I wanted the stock to go down. I wanted the stock to stay below 16. And that's why I have the green line here. So anything below this green line, I would hit max profit at expiration. Now what you guys can see here is that I had a May 1st expiration, so I did extend this a little bit. And I ended up closing this before expiration, and I took my profit because I didn't want to risk that Snap sort of spiked up next week past 17. I was up about $10 on the position and I took it. So if we run through how much premium I would have received if I held this until expiration, we can see I sold the 16 call and I received $123 for it, and I paid $75 for my 17 call. So I received, my max profit would have been $48 if I kept this until expiration and Snap stayed below 16 by May 1st. I ended up closing the position early. So what we can see is I bought back the 16 call for $53. So if I do 122, which I received here, paid back $53, that's $69. And then on the 17 call, I paid $75 and I received back 17, so $58. So I received, so 69 minus the 58, so I made $11 on this trade. So at this point, my P&L was $11. If I did hold until expiration and it was below 16, which was on May 1st, I would have made that $44. So I closed this position early just because I didn't want to take the risk. So the next one was Roku. So if I pull up Roku here, Roku on both sides, I'll zoom in here for you guys and I'll show you where these lines are. So if I pull up the E-Trade and I go to symbol Roku, so here's Roku. So let me pull up the calculator. So I sold the 113 put for April 24th expiration, which was last Friday. So I received $70 for that. And then I bought the 108 put, so I had to buy back. So my net premium received was $40 on this trade. So I received $40 if Roku was going to be above 113. So anything above this green line, I would keep this full premium at expiration. So what ended up happening, I bought it here on this red line here on the 10-minute chart on Wednesday afternoon. I thought that Roku would find some support here at this level. It already was finding support at these levels, the 122 level. You can see the wicks here and here bouncing off this support, and I felt that this was a strong support level for Roku and that it would stay above that point by Friday. Now again, I bought this on Wednesday, so I only needed to wait 2 days to collect that full premium. So when it ended up happening, Roku sort of stayed flat both Thursday and Friday, ending up above the 113 level. Both these contracts expired worthless, and I kept my premium. So another $40 into the account. So in total, $40 on Roku, $44 on Home Depot, and then right now, I'm sorry, it was $77 on Home Depot. So $77 on Home Depot, $40 on Roku. I received $10 on Snap. So right now, $127 in premium, and I have one more trade. So the last one was Microsoft. So if I go to Microsoft on both sides, zoom in here. So for Microsoft, I'll pull up E-Trade. I go to Microsoft. All right, so here are my trades right here. So I sold the 170 put and I bought the 167.50. So if I pull up the calculator, we can see I received $111 for selling this 170 put, and then I had to pay back $69. So $42 in Microsoft. It was my net premium received if Microsoft stayed above 170. So if we look at the charts, we can see that I bought it here. Now this trade went against me for a temporary amount of time. So you can see I bought Microsoft here thinking that it would stay above this 170 point. So I saw this resistance here. I saw some support here on Microsoft, and I figured that any kind of fall would bounce off of that level. And I was comfortable saying that by Friday, this stock would be above 170. Now what you can see is Microsoft did have a really big tank through 170 down to 167.50. Now if the stock was to stay below 167.50, I would lose my max loss, which was the difference between these spreads. So if I calculate my max loss, 170 minus 167.50, that's 2.5, so that's times 100. $250 minus the premium I received, which I believe was $40. So my max loss was $210. So if Microsoft did stay below 167.50, I would have taken a $210 loss. Now, I did hold this because when you're trading credit spreads, time is on your side. These contracts are going to decay every single day, and your premium received will have a higher probability. So Microsoft ended up spiking in my favor, stayed above 170 by expiration, and I ended up keeping that full premium that I received. So in total, guys, if I add the 77 for Home Depot, the 40 for Roku, the 10 for Snap, and let me just double check this Microsoft. So I have 127 right now. If I do 111 minus 69 plus 127. So in total this week, $169 in premium received from trading these 4 credit spreads. All right, so if you made it to this point of the video, first off, I want to say thank you. And for that, I want to go over 2 of my option plays for earnings that are coming up. So number 1 is Microsoft. Microsoft was the best performing stock before the virus hit in 2020, and has been falling off because of that. Found some support at this 140 level and has bounced ever since. Microsoft has beat expectations for almost 3 years in a row. It's almost like 10 or 12 quarters here that it has beat, and I don't see that changing. Microsoft Teams has been extremely popular with corporations. I know my company is using it a ton. I know they'll probably get a little bit of an increase of usage on the Microsoft Teams platform. And I think that, Microsoft is overall a great company to own. I went ahead and I bought an option a little further out. So I did buy the June 20th or the June 19th calls. I bought them for 64 cents. I only bought 1 contract. So hoping to hold this for a little bit longer of a period. I think Microsoft will continue higher here off this earnings play for a continuation play. So that was the first one that I bought. The second one that I have is McDonald's. So if I go to McDonald's, again, I know I've been to McDonald's a little bit more often now that the coronavirus has hit. I know I've seen the lines piling up there. I don't see their business slowing down at all because of this. And they're, I think, about 15% off their highs right now. So if we look at from here to here, it's about 14.6% off their highs. For a reason that I understand because of coronavirus, but I know that they have been extremely busy. I've seen lines, I've been there. I know a lot of people are going there just to eat. So that's my census for why I'm playing this. I think McDonald's will beat. They've beaten here. They started to not beat here, but by very, very small margins. And I think that with their expectations here at 1.57 EPS, that I think this will be a beat for McDonald's. And I think we see the stock go a little higher. It did close this gap here at I think it was 180 to 185. Closed this gap, has been finding some support here at this 180 level. I think its next test is this 190 to see if it can break that, and hopefully earnings will be able to help it past that level. All right, so I hope this video helped you out with those credit spreads, gave you some insight on why I'm trading them, as well as those 2 option plays for earnings this coming week. If you guys have any questions about this video or stocks or options or anything related, make sure to leave them down in the comments below or shoot me a DM on Instagram. The link is in the description below as well. Thank you guys so much for making it to this point in the video. Make sure to smash that like button. Make sure to subscribe to the channel. It'll really help me out. And I hope to see you in the next one. Peace.